Regular annual series Tax Talk with Willis and Jurasek CPAs and consultants. Today joining us is CPA Ryan Parshall. Hey Ryan.
Hey Bart, how are you?
I'm good, nice to see you.
Yeah, nice to see you. Thanks for having me on.
Sure. It's always great to see Ryan. Ryan is JTV's accountant and you do a great job. Thanks so much.
Thank you.
All right, so here we are, January. We're starting to see some of the stuff come in the mail from our banks and investments and all that. We should be. What should we do if we have an account? What should we be doing as you're probably trying to get ready to work on your clients' taxes?
Yeah, I mean, really, the stuff that comes in the mail this time of year should be no surprise to anyone. The tax return really is just reconciling back to what you've paid or had withheld for the year and making sure you're not over or underpaid for the year. So for me, the biggest thing is planning. You know, I don't like surprises at the end of the year, and taxpayers don't either. And you know, the least favorite part of my job is having to call up a taxpayer and say, what happened here? You know, here's this tax bill. So, you know, come this time of year, to me, it's just prep work, you know.
There are things people can actually do to minimize the taxes they pay, and it can be significant.
It's significant, you know, and that's the point of getting started early. You know, if something big changes, you know, we have those discussions to say, let's do this to minimize your tax, let's do that. All sorts of things that are out there and to really be able to help you do that. And so the planning, again, is a big part of that.
Are there things that have to be done like before 2023 ended in order to be effective for this?
There's some things like that for businesses especially. You know, making sure if you're a cash basis taxpayer that everything is paid out the door and everything to help get those deductions in. But there is some leniency on the individual side. Like if you want to make IRA contributions after the fact, you would have until the time the tax return is due, HSA contributions, things like that.
Yeah, every year it seems here at JTV we'll have a client say, oh, I want to take care of paying everything like before the year ends.
Yeah.
And that basically would be a business expense if they want to.
Yep, correct. Yep, and the big thing is, you know, thinking about, you know, if your tax bracket's going to change for the year, but there's things you actually need going into next year, you know, let's talk about that. Maybe let's bring those expenses into the current year and help get that tax write-off before the end of the year.
We can start right now for 2025 filing even, right?
For 2024?
We can do stuff in this calendar year that we can take advantage of next year.
Correct. Yeah, we can start that planning process now. You know, the big thing right now and the hot topic is retirement. You know, the federal government is giving a lot of incentives out there to really get people to participate in retirement. Things like upping the contributions, doing things when you want to take the money out before you get penalized on all that. If you took it out before retirement age, there are certain amounts now that you can take out and they're actually going to say, okay, that's not subject to penalty. One of the big things is too, you know, they're really incentivizing employers to set up retirement type plans. And they're offering credits and whatnot for the administration of setup and whatnot to help do that and get these employees in retirement plans and start saving for the future.
What is the federal government's thinking on all this retirement push? Are they looking at the day that Social Security might be insolvent?
Well, you know, and I'm not sure the direct answer on that, but they have done studies out there where, you know, it's just census type data where people, you know, at retirement age just don't have the funds to be able to retire. And I think that they're trying to get people to that point where, hey, it's not just Social Security that you need to live on, you need some retirement funding as well.
With these new 401k plans, there are incentives for employees to sign up. And in fact, I think the new plans don't they require employers to sign up everyone that works for them?
There are new 401k plans. If you have over 10 employees, yeah, you must automatically enroll your employees in. I know that it's for 401ks and like 403bs that are government type plans. I'm not 100% sure. I'd have to read up a little bit if that qualifies for like simple IRAs and other retirement type plans. But I do know new 401ks, 403b plans, that is required.
So what kind of incentive are we talking about for an employer that would start a 401k?
So again, going back to the credits, there's administrative fees setting that up. The IRS right now is allowing up to $5,000 in federal tax credits for 3 years to help make that push and get the employees enrolled.
Well, that's, I would say, a pretty good incentive to just put a plan in place.
It is, and there's some other things too. There's Roth IRAs and things out there. And I don't want to get too complicated on things, but there's like 401k Roths where before employers really weren't allowed to match on those. Now they are. And Roth IRAs are another great type retirement plan that's out there that if you are able to make the contributions to, the earnings grow tax-free, and when you retire, you pull that money out and none of that's taxable.
That's awesome.
Yeah.
So many questions about retirement as the baby boomers get into the age of retirement. And I have a lot of friends that'll say, I'm thinking about starting Social Security now. I'm 62, or I'm going to wait till I'm 66. Or everybody, it's a different answer for every individual.
Absolutely, yeah. And that again, thinking about that, when you're getting close to retirement, that's when it's important to get the CPA involved and help guide you down that path.
And you'll be happy to talk to people and look at their...
Yeah, absolutely. That's what we do.
Yes. Because you can make a very costly decision that you can't undo.
Absolutely. Yeah.
COVID, Recovery, Secure Act, all the various different changes in law throughout the course of the COVID. Are we at the end of that?
Gosh, I hope so. I hope so. It seems like the COVID stuff is kind of behind us now. All the employee retention credit stuff is behind us. Although the big news is now, the IRS is not giving out any more of that funding. They've put it on halt because of so much fraud going on with it.
They're clawing back stuff that's not been spent too.
Yep. So I'm hoping it's the end of it. But this retirement stuff that we've touched on, I think it's a good thing. And I'm always in the boat when it comes time to tax planning. If the taxpayer has the means to do it, max out that retirement if you can. It's the number one way to save right now on your taxes, and you're building that nest egg for the future.
Yeah, and I know people that are in their 20s or even 30s, they might not even be thinking. It just sounds so far off.
Yeah.
I wish when I was that age that there had been things in place to help me.
Yeah.
Well, if somebody, I know this is your busy season, but you handle individuals, companies, nonprofits, you're available, you and your firm.
Yep.
Welcome calls.
Yes, absolutely. We're here to help.
All right, you'll be back as we look at different topics throughout this tax season with our annual feature, Tax Talk. Ryan, good to see you. Thank you.
Yeah, thanks, Bart. Appreciate it.
You bet. CPA, Ryan Parshall from Willis and Jurasek CPAs and Consultants with our first episode of Tax Talk.